Good afternoon, welcome to Freight Forecasting. I'm Michael Vincent, your host. Today I'm going to be flying solo. Had a few guests on lately, but wanted to take it back a little bit and kind of work through a market table on Sonar and show you some things that that we're looking at and that I'm looking at specifically on a daily basis. Now, you hear about outbound tender volumes or truckload volumes dropping, and they are dropping across the nation, and rejection rates are falling, etc. It's no time to be complacent, and it's no time to throw your hands up in the air and say that there's no opportunities out there, or to think, if you're a shipper, that there's really not that many hurdles that you have to overcome, that the capacity is going to be there. Falling out of your routing guide is not going to be an issue for you. There's plenty of things that you need to be watching. As imports tick up, which they have been lately, and as the lanes become more irregular, or the fragmenting and capacity winds up in places it normally doesn't, as shippers change what they're producing and shipping, and as demand changes across the country, as eventually lockdowns become restricted or lifted, or become more restricted in other areas of the country hit different spikes or different levels of peaks of the coronavirus. And as other companies, or other countries, I should say, come online and their production starts coming up. Been watching the imports from China specifically, but all over, and they are up, and volumes are up in many of our port cities now. Not as high as they traditionally would be, but some good, solid, steady growth over the last few weeks in most of those ports as far as imports. So that changes the dynamics both on the rail and truck. So specifically today, if we take a look at my screen, what I've got here is I've got a market table on the left-hand side, and then I have a chart here. Now this chart occurs whenever I click on one of these squares, and then I can do some analysis inside this chart. But in particular, what I'm looking at is the haul, which is the balance of inbound and outbound. Higher haul score means there's more outbound than inbound. Inbound tender rejects, or the willingness of carriers to bring freight into a particular market or accept loads into a market. The inbound tender volume, which is the volume loads into the market. The OTRI, or outbound tender rejects, which is the rejection rate, or it measures really the capacity's ability to handle the demand or the number of loads. A higher outbound tender reject rate means that there are more loads being rejected and there's upward pressure on the pricing. Outbound tender volumes measures the volume of loads outbound of a particular market. In this case, I'm hovering over Twin Falls. You can see their airport codes over here on the left. The reefer tender rejection rate, so specific to refrigerated capacity, the tender rejections there, so you can see the capacity's tightness or looseness in that market. The reefer tender volumes, or the volume of reefer loads out of that market. The van tender rejects, and then the van tender volumes. So I'm looking at these two different modes over here on the far right-hand side, reefer, and then van. These are the overall market over here on the left-hand side, these 5 columns on the left-hand side. And then on the right-hand side is a chart that when I click on it. So quickly, I'm going to show you how you can build this, and then we'll kind of look at this a little bit. So in Sonar, if you take and I'll just use my quick casting from my quick casting videos that I do, because I think this is blank. Yeah, it is blank. Now I could just come down and do add a page. Actually, it's got a critical events, but I could add a page and name it, and I will. Let's just do that. Freight forecasting. We'll save it. It'll bring us up a blank dashboard. Now this black dashboard I can then add with whatever I want. So what I do in Sonar is come over to my widget, add a widget menu, and I come down and I create a watch list. A market table is a type of watch list, and you don't have to exactly pick the market table, because you can switch between these actually as you're building it. But I'm going to build a market table, and we'll just call this freight forecasting as well. I click my manage symbols, and here I got a list of everything that's in the system. I happen to know where these things are. It's really not that hard to figure this out, but there are excellent training videos within Sonar and on FreightWaves.com that you can look at to build these quickly or to figure out what the different indices are. So quickly, what you do, or what I do, is most popular trucking industry indices. And I can look at here, I've got my DAT long haul van, my head haul index. So I'm going to pick the head haul index. In this case, I'm taking the entire United States. So I click out X market, and it'll take everything United States, add, and then I can click done if that's all that I'm going to add. But what I'm also going to add is the outbound tender rejects. So I'll add that for all the markets. And then I'm going to add my outbound tender volume for all those markets. And I'm going to click done. Now that's not all of the indices that I had on the previous one, but I'm just showing you how you can build this. And then I save this, and I've got these listed here. I've also got an alphabetical order, or well, not an alphabetical order, but I've got all of the markets in the United States here down the left-hand side, and then the relative values for the head haul, or the haul index, the outbound tender rejects, and the outbound tender volume index added to it. So that's how you build that. Now you saw that chart that was next to it. Very simply, I just click on any one of these, and it charts it. So for this, in this instance, I clicked on the haul for Richmond, Virginia, and you can see that the haul index for Richmond has been growing, and I can grab this crosshair here, has really been growing since April 1st. And if you want to go back and call this a bounce, it's really been growing since 328. Has been moving up. And if you're wondering how we look at these different things and can forecast trends, if I click on this tool in the upper right-hand corner, I can bring up this menu, scroll down and grab a trend line, and then click on the 2 points that I want to trend. So from the 28th through to today, it's up 44%, 16.93 bars. Right? It is still a backhaul market, as its overall value is negative 21.03. So it's a backhaul market, and I need to explain that a little bit. So it is measuring the haul, or the relative outbound to inbound loads. Outbound loads are growing quicker than inbound loads. That's why it's in green. That's why the value shows a plus 22%. It moved 22% towards a head haul market. The true value is negative 21.03. It is still a backhaul market. This gives you the change. Here's your trend line. Very easily you can click on this. If I click this back, I can get rid of this toolbar. Then I right click and kind of clean this up, because what I want to show you is that this, I don't have to kill this or get rid of it by clicking on this X. I can just switch to Reno, and it will flip this over. And it will give me the fact that Reno is changing from a backhaul to a head haul market, or outbound is growing relative to inbound. Now, if you want to see what is happening in there, you can see in Reno, outbound tender volumes are actually growing 17.1%. On the other chart, which we'll go back to in a second, I would have inbound next to this. Now, if you're not, so you could see what is happening. Is inbound growing and outbound growing? It's just that outbound is growing faster than the inbound, or is inbound staying flat and outbound is growing, or is inbound dropping and outbound is going up, which is the worst case scenario for a shipper. That type of change in a head haul. It is possible that this is a bad deal right now for shippers in Reno. We don't know what the inbound volumes are doing. We can quickly do that right here if we wanted to. We could change this and look at the OTVI.RNO, which gives me the outbound tender volumes for Reno. Shows this jump right down here. If you're looking at this, right here is your jump. We can look at also the ITVI, or the inbound tender volumes for Reno, and plot that along with it. And so now what you're seeing here, let me give this display a little bit of clarity for you with some large font, which always helps. So now what we can see is that inbound has been dropping since 3:30, coming down steadily. The inbound has, and the outbound has been going down as well, but now it's going up. So right here you have this contraction, less capacity coming in, more capacity leaving. Now, further to that, we know, so now we know that outbound is growing and inbound is shrinking. So that's a little bit worse than if this were staying flat and outbound were just growing faster than the inbound, from a shipper perspective, I should say. So let me remove that and look at outbound tender rejects for Reno. Let me just grab this really. There it is, it's dropping, it's kind of flattened right here. Probably due to that, to the head haul. So now let's look at I-try, or the inbound tender rejects for Reno, and take a look. The inbound tender rejects are dropping. If inbound tender rejects had been rising, giving more pressure or causing even less capacity to come into that market, I would suspect, or I would have forecasted that these outbound tender rejects would start to rise. That is still possible if the outbound continues to grow versus the inbound. But since rejects are dropping, more people are accepting loads into Reno. That's a good sign for shippers that that volume is going to continue to be able to be absorbed, and rejects should stay normal. But Reno right now is not that bad a market to find a load if you're in that area, because volumes are growing on the outbound side 17.1%. Let's go back to the original chart that I had pulled up. Was it my market volatilities map or dashboard? Yes, it was. Excellent guess, because I had forgotten. Okay, so what we have here, let me clean this up a little bit. So here we have all of them in there. Now the other one, we just had the outbound and then a head haul. So I explained this before. We have the haul, which is the outbound, inbound, the inbound rejects, the inbound tender volumes, outbound rejects, outbound volumes. These are all modes. And then I have it broken down by refrigerated and by van, so you can kind of look at these. Now, you see all this red all over the place with the outbound tender volumes dropping minus 32.5% in Lubbock, and Twin Falls down 19.3%, etc. What you can do with this, now you're looking, if you scroll through this, you can start to see that there is growth in certain areas, and there is growth or upticks in van tender rejects, refrigerated tender rejects. The haul is changing here, the haul is changing there, 502% up in Pendleton, Oregon, or 502% move towards a head haul market or a better head haul market. Relatively small value at 2.77 though. So these are all over the board. So you'd have to scroll through this and look at it, right? Not necessarily so. So let's pull this back up to the top. What you can do is on these arrows, I can sort by name, but I can sort by value. So the largest head haul markets that I have, if I click on this, now I've got the largest head hauls, or Allentown, Pennsylvania at a 70.75 and a plus 20.5% change overnight. And we can click on this and change that chart on the right-hand side and take a look at that and see what's going on. So you've had a rather large spike in outbound or towards a head haul index in Allentown really since the 3rd. You had this uptick, a little bit of a valley going up. So it is moving towards a head haul market, stronger as a head haul market. Now, this is only for the last month. Let's look at 6 months and see where it is. It has changed over the last 6 months to a very strong head haul market, dropped and is now back up and is back up on the climb. So this drop since the end of March, well, 23rd of March, this plummet down, if you will, this cliff, has bounced up. So if you listen to these outbound volumes just dying and O-Tri dying and so on and so forth, it's not necessarily true in the market that you're in, and it changes almost daily, and it certainly changes week to week. Here's a prime example of it right here. Now, why is this changing? I already have it on this chart over here to the left, or my market table. Everything in this particular market is down except for outbound tender volumes, slight tick up, 0.6%, and van up 0.2% to 169. Now, these are not necessarily large moves, but when you couple that with inbound tender volumes have dropped by 5%, 5.1%, and the rejection levels have dropped, now you're starting to put more pressure on this. So you can take a look at that. You can also sort this by the different modes. So if I'm looking at this from a reefer perspective, as a shipper of refrigerated commodities or a reefer carrier, I can sort by the reefer tender rejects or the reefer volumes. So let's say I'm a reefer carrier or brokerage who specializes in moving reefer refrigerated modes. I can then start to sort this and change it from to value to see my largest markets and how they're reacting as far as their volumes, growth or down. Or I can take a look at this at percent change and see the greatest percent changes. Little different story going on here. Remember, O-Tri and OTVI were all red on that previous chart. If I change my OTVI and look at the percent changes, there are plenty of markets where outbound tender volume is growing. Plenty of markets. And this is a quick, easy way for you to identify these by building out this market table and then sorting by the volumes and the modes that you're looking for. So your outbound or your reefer tender volumes, percent change. Now let's see what's going on in this market. So you've got different changes that are going on here. An 89.9% change. Now you're Taylorville, Illinois, but you've got a negative number on the rejections. So you can look at these different areas. If you're a carrier, Elmira, New York, 20.2% up in reefer tender volumes, and you've also got pressure on the rejections. So you can get a little bit better rate. The rejection still is at 12.23%, so there's a pretty good pressure on spot market rates on reefer to be up in this particular market, a 2.3% increase in this is van. Actually, it's worse, 34.63% on the refrigerated tender rejections and a 6.1% increase. So what I was going to explain is that there's upward pressure on those spot markets. Prices for refrigerated capacity, it's even stronger than what I was looking at. I was looking at the wrong column. So your refrigerated tender rate's up 6.1% at a 34.63. Extreme pressure. There's extreme pressure on refrigerated spot markets out of Elmira. You also have a Hall index of 586.5% change, which isn't great. It's at 1.8, but you've got growth across the board here, except for your inbound. Inbound tender volumes are dropping, putting pressure on the upward volume in vans and upward volume in reefer, which is causing your tender rejects to go up, and therefore you've got pressure on your spot rates. So this is an excellent way to look at things. Let's look at tender volumes here a little bit on vans and look at percent change. We can see Reno, Rapid City, Bismarck, what is this, Erie, PA, Birmingham, Tucson, Charleston, West Virginia. There's plenty where van volumes are growing. Now, we look at we know that these are here, so let's look at a couple of these here, like El Paso. Let's look at El Paso. So we got tender volumes, van tender volumes. are quite high. Now, I just kind of drilled in with my mouse so I could see this a little bit better, this change. But over the last 2 days have gone up about 25, almost 25%. Well, actually 25%, from down here to 19.87 to 24.9. So up about 25% in the tender volumes. Now, if I look and see the VO, which I had that there, but I want to measure it against this because I want to see its effect. Now you see the picture here. Let me display this a little bit better with some large font. So now I've got my large font on, and we can see your uptick in volumes has caused a spike in van tender rejections from 9.42 all the way up to 19.55. A highly volatile market, strong pressure on spot market rates, tender rejections spiking in this particular market. So if we look at these from an overall outbound tender volumes, if you don't have these up, you can look at the outbound tender volumes and then be able to look at the different capacities here to decide how you're going to attack this market or how you're going to help out your customers. Or if you happen to be a shipper, where are those hurdles? Now, you can also do this on maps as well, and that's for another show. But what we can look at here is the most volatile markets table and kind of compare this next to this watchtower. Let me close this out. Now, this is how I tend to look at it on a daily basis, these two together. So I have my most volatile markets, and that's easy to find. If I close this out, it's really easy. On the add widget, I come down to most volatile markets, select that widget, here it is. Now I can select specific markets that I want to look at here to see which are most volatile. If I leave it this way and hit save, it's going to show me every market that's out there. And I can change that setting as well. So I can change this setting to be show all selected markets or show selected markets with volatile exceptions only. So I can do either one of those. So it would have showed me different markets even though they're not considered highly volatile. Now, the difference between these two we've explained before, but I'll do it again right here. This is showing you absolute change overnight. I can change these to weekly changes if I want to, or monthly or fortnight, 2-week changes. I'm looking at the daily change because each and every day is new right now. You can trend out the weekly changes, etc., to see if those pressures are strong and they're going to last. But I'm looking at this from the perspective of I'm walking in this morning, what is happening? This is going to tell me what's happening. First, I can select my markets that I'm interested in. When I set this up, I can click this all and just click the markets that I want to look at, right? Or I can just leave it on all markets. We'll leave it on all markets right now, and we'll save it. So this is going to tell me those markets that have changed outside their normal fluctuation patterns. Where are the most volatile markets? Where am I in the greatest danger, or where are my best opportunities? If I'm looking at outbound tender or outbound reject volatility, and I'm a shipper, these strong decreases are going to signal to me that capacity is available, it's loosening. I should have a pretty easy time with my routing guide, and spot market rates are dropping down. There's low pressure on those spot market rates relative to the last 7 days. If this is a strong increase, which there aren't any markets that are outside upward pressure on outbound tender rejects, then if it was, that would be showing me as a shipper that I'm going to be falling out of my routing guide and having an issue in there at an extreme level. These are outside the norms. Same with head haul, same with tender lead times, the outbound volume. You can also sort this from greatest, moderate increases, etc. So this is showing you what is outside the norm. Obviously, the United States the volumes are dropping, tender rejects are also dropping as capacity loosens, but this will give you those looks into those micro markets and give you a quick feel for what is going on and understanding where those opportunities are today or over the next week, or where those hurdles are today or over the next week. It's fragmenting. The overall United States is coming down, but in specific markets, that is not necessarily the case. Certainly not the case in Eclair and other markets. So that's a little bit better insight into how you can view these on a daily basis. Now, you do have the ability to start setting alerts, and we'll get into that at another time, or I'll do that in my quick casting. Just check out FreightWaves.com, because I do have a quick casting segment, little 2 to 5 minute videos that give you little tips on how to do this type of stuff. But hopefully this was a little bit helpful in explaining, as you're reading FreightWaves.com and you're looking at the markets, and perhaps you're watching the different shows that we have here when you're looking at FreightWaves Now or with Sonar, etc. And they're talking about, oh, volumes are rising and rejections are rising and they're dropping. Yes, that's an overall macro view, and we try and look at specific little markets. This is how you can look at those micro markets and those specific lanes, and how you can set up these dashboards to look at those specific areas in the country that you are most interested in, or where you have your operations, or by mode, refrigerated or van, so that you can see where are those pressures and where are those trends, so you can overcome those hurdles, or you can take advantage of places where you can get freight on truck, and where you can add value to your customers by knowing right now what is happening to their ability to secure capacity and what it's going to be like over the next few days. I'm Mike Vincent. Thanks for watching. Peace and love.